Welcome back to A Matter of Insurance, presented by the New Hampshire Insurance Department. Have questions or concerns about your insurance coverage? Contact the Consumer Services Division at no charge by calling 800-852-3416, emailing consumerservices@ins.nh.gov, or visiting nh.gov/insurance. Joined today by Property and Casualty Division Director James Fox to talk about an Insurance Journal article that was titled "Higher Auto Claims, More Frequent Accidents Continue to Outpace Premium Hikes." And James, I mean, obviously insurance is there to pay for things as they go wrong, but obviously has a big impact on the industry as a whole if there is an outpace of how much people are paying in versus what they have to put out to cover these damages, right?
Yes, AJ. First of all, nice to be here. And yes, I would agree that insurance companies spend a lot of time with actuaries determining how much premium they need to collect in relation to the cost of their business and trying to hit the sweet spot so they're making the profit they want to make. And recent trends is that because of recent factors that they're not hitting their marks as they hoped. So as a result, they've been filing for rate increases.
And this is based off of data that Ambest's latest market segment report put out. And here's a quote from the Insurance Journal article. "Deteriorating liability and physical damage resulted in a more than $4 billion net underwriting loss in 2021 for personal auto insurers. Insurers find rates can't keep pace with the increasing number of accidents and costs, such as economic inflation, supply chain disruptions, and technological advances in vehicles, which increase claims costs. In 2022, inflationary pressures on physical damage claims costs, rising medical expenses, and greater claims severity caused the more than $33 billion in underwriting loss." It's just a huge jump.
It is huge, and it all makes sense. If you break that down, they're saying we're having more accidents, and because of inflation, so if you have more accidents, you have more physical damage to the vehicles is what we're talking about. And that means because of inflation, just like if you go to the supermarket, it costs you more money, it's going to cost more money to fix cars. And then partly on top of that, like your food is getting to the supermarket, but there's supply chain issues because parts for these vehicles don't all come from the United States, they're not just coming from Ohio. And then the last piece, well, the two pieces to that. The other piece that is the high tech in the cars. These cars have gone from something that you can fix in your driveway when I was a kid to you really can't even look at the engine, and they have backup cameras, which well, that's high tech, but then they're getting to the point where they're going to be self-driving cars. So if you think about it, if you have like a self-driving car, just think how expensive that's going to be when it does get damaged to fix, because you got to make sure it drives correctly. So all of these technological advances we've had, they're all wonderful for our daily lives, but when it comes to insurance and having to cover losses, it gets very expensive for the insurance company. And then the last piece to think about is that when the pandemic hit and there weren't many people on the roads, there was a fear of, I don't know if a fear is the right word. There was, the police aren't going to pull people over because, for minor traffic violations because they don't want to get COVID. This is back, this is way back before vaccines are out. People got kind of used to driving faster and there weren't a lot of cars around. So they were driving, a little more, maybe we call recklessly. And there's a point in time where we got to all remember now everybody is back on the roads. But if you're on the road, you see a lot of people driving a lot faster than they used to. So the faster you drive, the more severe the accident's going to be. So forget about the technology; it's going to be just a worse accident. So again, that's going to contribute to the cost of the repair. And that's always, I tell people, that's something you can actually affect yourself. Drive very defensively and drive very safely, and you won't be in the situation where you're having a large deductible bill because of a car accident, which no one likes to see.
It takes a long time for that accident that you had to pay out to eventually have your rate reduced back down to what you might call "quote unquote" normal.
Right. So there's really two things to think about there. One thing is the insurance companies are saying, across the board, things are more risky, and therefore we have to raise our rates, which in a competitive market, the insurance department don't disapprove that. And the main reason is because you can shop your insurance. So that's a general thing we're talking about. But also on a micro level, the person, if you are particularly show that you're dangerous, then you will get an extremely high rate increase. And some would say because you've earned it through your behavior. That's how insurance basically works. There's like the general standards, and then when you're safe, you're in the lower safer category, and then when you show that you're particularly dangerous, you get pushed up into the higher categories, and it can cost you a lot of money. and it can be over years. It doesn't just drop the next year. So it's something you really should think about.
A lot of people will see their insurance rates go up and assume, oh, this company's trying to rip me off or something like that. This is a very highly regulated market. I mean, the market loss ratio is something that's brought up a fair bit. What sort of impact does that have on people's rates at a high level?
From that, I'd say there's really two things. Sometimes there is sticker shock on your premium. So the rates drive your premium, like what your bill is. So if you think, I haven't done anything, I haven't been in an accident, I haven't gotten speeding tickets, I don't know why all of a sudden I'm so expensive, and you think it's an error, you can work with your company. And if you're not getting good answers from your company, then you should call the consumer division here, and we will be able to get a good answer for you on why your particular rate goes up. When we do that, almost always, it is something that was filed here. So go back to what AJ was saying about the highly regulated. How the companies determine the rate, which then drives the premium, is filed here at the department, and it's reviewed by the actuaries. And that's basically all actuaries do, is this kind of work. They set loss ratios for insurance companies, and then here at the department, they make sure that what the company filed makes sense actuarially and is going to be actuarially sound, they call it, but like good math, let's say. So that is all really locked in. And it's just a matter of you have found yourself in a more risky category somehow.
What sort of impact does where you live specifically relate to this? I mean, we're in New Hampshire, primarily a rural state, though there are some city centers like Manchester and Concord and Portsmouth and things like that. We see on the national scale, obviously, it's going to be very different if you're driving around LA. How much does the city-rural impact have on New Hampshire?
Depending where you live, that is a factor among many about how expensive your premium is going to be. So that is a major factor. If you're in an area that, I don't think you have to say city. I mean, it kind of does end up that way, but that's just more, it's always thinking about risk. Everyone is trying to determine risk. If you're living in an area that the insurance companies have said, this is a riskier area, we have more accidents here, more severe accidents here, all of those things, which are pretty well known. And then therefore they file that part of the rate here and says, you're more risky, so you're getting a bump up in how much you're going to have to pay for premium. And that's, in a very lay sense, that's how this all works, is they take all of these different factors, and it's where do you fall in these factors. If you're more risky, then it's a little bit of a bump. And then you think you add them all together, then you maybe have a sticker shock, and you go, oh my God, this is way more expensive than I thought it was going to be. And this happens to everybody. When I was like 20 years ago, I got a sticker shock. I started paying, I think, per month what I used to pay per year. And I did no idea why. But it came down to my wife, who's a wonderful person, had not a great driving record in a short span of time because she was late for work a lot. So that's something you can affect by getting up earlier or driving safely. A lot of this, some of this not in your control. If you live in a place that is just more risky, this is going to be more risky and it's going to cost more. But some of it's actually in your control, and so you should focus on things that are in your control. And even some of the companies will put what they call telematics into your car, so the insurance company actually can read how hard you brake, how quickly you accelerate, because those are also factors that go into the issue of how risky you are. And so if you're a good driver and you I don't brake hard, I don't accelerate hard, all these things, then you could think about putting a telematic in your car to get a discount on your insurance. So there's a lot of different factors, but one of the biggest ones is to shop your insurance too. You could take all these things aside. I'm safe, but if you're with a company that has a higher rate structure, then you could shop for other companies that don't.
Property and Casualty Division Director James Fox, thank you so much for joining me.
Thank you.
Be sure to subscribe and comment on the show on your favorite podcast platform, including Spotify, Apple, and Google. We're now also posting to YouTube just by searching for New Hampshire Insurance Department or A Matter of Insurance. And once again, if you have questions about insurance, do not hesitate to contact the Consumer Services Division at no charge by calling 800-852-3416, emailing consumerservices@ins.nh.gov, or visiting nh.gov/insurance.